Good afternoon, everyone. It's David speaking. It's exactly 1:30, and welcome to our VectorVest weekly webcast. It's a great pleasure and honor to be here. We have a guest speaker today, a very experienced man who runs our group in Edinburgh, Bill Ritchie. And so the format for this afternoon will be similar to the format that we had last week, where we had Mark speaking to us. So I'm going to do my best to get through a market review in about 10 minutes, and then I'm going to hand over the reins to Bill to take us through the rest of the afternoon. So I'm looking forward to that immensely. So let's see who It's Julian. Hi, are you Julian? And Copper, Nigel. Copper. I just see you, Copper. Let me move on a pace. I have to put up the VectorVest disclaimer, folks. As you know, although qualified to give financial advice, I can't give one-on-one financial advice without sitting down with you and doing a long and a very detailed fact find. Although I won't be talking about it today, I don't think I will have time, but I'm allowed to talk about those shares that I own myself, but I have to make it very clear that many of those shares may not be suitable for you. And because of my years in South Africa, I tend to be addicted to commodity shares, and those shares, as you've seen over the last few days with this spell of bad luck that we've had, re the flu, that's caused the commodity shares to fall through the floor. That's just the way it is. So we'll be taking a much more conservative view of the market this afternoon. Chris, I doubt if I'll be able to answer that this afternoon, sir, in this presentation. So this is where we always start. What's the share really worth? How safe is it? And some idea about the trend. So at VectorVest, to summarize what we do, we put together the fundamental position of a company. And as Dr. Lido says, we want to invest in the very best companies, those companies with the best combination of value and safety. We want to buy those companies if they're rising, when the general market is rising. And when you can tick all three boxes, you get very lucky at this. So if I go out of this and I go into VectorVest, this is the stock viewer. The one that I looked at last week is still going reasonably well. EGL, EGL.L, trading at 170. We believe it's worth 328. So it's pretty much trading at 50% of the VectorVest valuation. That's a huge margin of safety. The relative value at 1.9 means that we believe it's going to outperform the risk-free rate by a mile. Anything above 1.3 is good. Relative safety is good. And it's on a buy recommendation. And we reckon it's going to grow earnings by 47% next year. So that's quite the number. And if I look at the chart, this is the chart that I used in the sneak peek of the ISA Millionaire course, and somebody mentioned a spring a moment ago. Well, that's just a classic example of what I try and get across in some of the courses, which is a spring where it comes down, takes out that low, and then reverses and springs. So I still think that there's a great deal of legs in this share, and as you can see, there's the earnings per share growing strongly, up from 10 pence to 40 pence in the last year, and our valuation is a mile up the page here. So it looks really good to me. That's what we're trying to do at VectorVest. We're trying to find shares like this that are rising when the general market is rising. And when we follow the rules, we can predict the future with a certainty that's quite uncommon in this line of work. Okay, I'm not saying we get it right all the time at all, but I'm saying that the hit rate gets to a level that's uncommon in this line of work. Let's just now look at the front page of VectorVest. And there, the front page is not great because we are in a short-term trend is down, underlying trend is still up, and we've got a confirmed up, but we've got two green lights here, and that's saying that the price has closed lower than it closed 5 days ago. And there's little black stars in the green light, which mean that the price is falling and the momentum is increasing to the downside. And as we'll see in a moment, the DEW is also down. So we've got 3 signals out of the 5 or 6 that are down. So that would certainly mean that any people that have got spread bets or short-term trades on the long side should in fact have cashed in. All right, so your green is my red. Jeff says he hasn't got any sound. Did I, Chris? I'm sorry. I'm sorry. I must have got that the wrong way around. Thank you very much, everyone. I appreciate that. I'm just maybe trying to go too quick to give Bill lots of time. Not good, folks. We got these red lights. I may have said green a moment ago. We got these red lights and 3 out of the 6 signals. So if I go to my presentation, I've got these all done so I don't have to pull them up, so it saves a little bit of time. So that's where we were a second ago. Not great. I wrote about the DEW 2 weekends ago because I felt it was coming. There's the effective SUK. Now, this is a very, very important level over the next couple of days. This pulling back in 3 waves so far could easily find support down here somewhere, but nevertheless, it is very close to giving us a confirmed down. If markets fall today, then I think we'll probably have a confirmed down in our hands today. As you can see, the buy-sell ratio is down around 1, and that's come off from 3 or 4. Now, I'm hoping in a few weeks' time to speak to Carwin in Wales, who's done a huge amount of work on the relationship between the MTI and the buy-sell ratio. So with any luck, we'll get Carwin to talk to us about that over the next few weeks. There's the DEW. The DEW I wrote about 2 weekends ago because I had this gut feel that it was going to keel over, and that's exactly what's happened. So those of you that are getting in and getting out of markets with the DEW, which is a good vehicle for a spread bet, certainly, the DEW would have caused you to cash out of those positions 4 or 5 days ago. And that's where the FTSE is. FTSE coming back, very important level down here, folks. It's up a tad today. I found trading in the FTSE really, really difficult. I think David up in Manchester mentioned a couple of weeks ago that the pound going up and down, you've got lots of things happening at once. My spread betting method on the Dow is very profitable. When I apply the same method to the FTSE 100, it's marginally profitable. The cable, well up on Friday, and of course it's given that all back today. Re the toughening of the Brexit, not Brexit anymore, but the EU discussion is pulled right back there today. So expect a lot of noise, maybe a trader's pleasure ground on cable. Euro had a really, really good day on Friday. There's the American market, folks. Hope I got this right. A great deal of red on the American market. We got a confirmed down. So even the most conservative signal on VectorVest USA is down. And normally we follow quite quickly after that. So one thing I want you to draw your attention to, folks, is that this is something that I've been watching. I was watching on Friday carefully because the close on Friday was less than the open. Friday was the last trading day of January. That's the first trading day of January, and the close is below the open, and that's always a harbinger for trouble ahead. So if we look at the stats, and I'm quoting the Stock Traders Almanac, every down January since 1950 was followed by a new or continuing bear market, or a 10% correction, or a flat year. Down Januaries were followed by declines averaging around 13% and provide excellent buying opportunities later in most years. So we have to be on our guard here. In the middle of last week, I cashed out of all of my long positions, leveraged positions in the American market. I've just got 2 gold stocks left. I didn't get this completely correct in the essay, folks, because I said that made a falling top, and Graham out in Oxford noted that I was in fact incorrect in that it actually made a double top there. So the price rose and the MTI made a double top. That's always a good advance warning. There's the confirmed down. And folks, this is not going to stop, I don't think, until we get down to here. So I think that we're going to have in all probability, a sell-off that's going to get us down to these old tops, and there's a 62% retracement in there as well. The DEW is also down, and I would suspect, folks, that if this is in fact just a fairly common sell-off, that support will in fact come into the market somewhere around here, maybe here at that top. So we've got probably a couple, 2 or 3 days on the downside to go before that support comes in. Clearly, the Chinese have put a heap of money into the market this morning, and that's probably responsible for this little bit of the reason behind this little rally that we've seen this morning. So just prepare yourself for a couple of days. Charlie, I don't know. I don't know, sir. Charlie says, will the plunge protection team prop it up? I think that they'll only come in down here, Charlie. I don't see them entering the fray there, but there'll certainly be a lot of bulls buying it around that 61% retracement. And depending on what happens in this ghastly flu, then China is pretty much not at work for the second week. Not good for the copper price and commodities, I assure you. There's the Dow, and there's my little model in the Dow. And it made me some nice money here. And a very small amount of money. I didn't trade it big. I went short there. There's the primary wave is down. It's below the 16, and it rallied to here. As it broke that low, I shorted it, and I had a stop loss up there, and I got away with it. Interestingly enough, folks, the futures market went up and took out those highs, but the cash market didn't. So got away with that and closed it out about 7:30 on Friday night, 7 o'clock, 7:30. I don't hold them over the weekend. So particularly happy with that. And I think that I wasn't watching this. If I had been watching it, the run up on Friday, the run up on Thursday would have in fact caused me to get out of it. But on Thursday evening, I had the wit to walk on Hampstead Heath for a couple of hours, and I missed it, thank goodness. My favourite place in the whole wide world is Hampstead Heath. You'll find me there most weekends. That is Fibonacci, Nazca. Yeah, that's Fibonacci. God bless him. It's not, Fibonacci's not a pizza. Dr. DeLeo says we're still in a bull market, folks. Bond market is still not great. I've cut all my US positions, and they were great. They were great trades. I'm very happy with the trades that I had in PAYC, SE, FORT, and AMD. Just remember, those trades were spread bets. They were not investments. So I'm holding Anglo Gold and Barrick, and that's Barrick. I'm still reasonably pleased with that. I got into it about here. Let's move on a little bit further. Gold. Worry about this. I think that gold could pull back here in the short term, and I wouldn't be at all surprised to see it pull back and take out that low, Charlie. I know when I mention something that's negative for gold, I get about 200 or 300 emails. But if I see gold pulling back to 1560, I would be very tempted to be a buyer. And my target, folks, and you can write this down and laugh at me, but my target 1725, and that will be made on the March equinox, March the 21st, so you can roar abuse at me if that doesn't happen. So very happy with the gold market. That's the daily chart. Don't like this as it's moving up here at all. And polymetal trading statement yesterday, really good. Copper's got a hiding back at support, and it could easily go to this level. Okay, so and that's oil. Too early on oil yet, but Paul Molina is listening out there. Paul, oil stocks will be a buy, in my humble opinion, in 3 to 5 weeks, but let's allow the market to make that decision. So I'm holding all of my UK positions, and CAS, I have a line in the sand at 78% of the last retracement. It's still above that. If it breaks down below that 78% of the last run up, then I shall cut it. But at the moment, I'm still holding it and reasonably happy with all of them. So, how are you, Paul? US futures are up, Stuart, without a doubt, on that huge amount of money the Chinese put into the market today or over the weekend. So now we've got something completely different, because we have got a young man just about to present to us from Scotland, and I need to find them here. A very impressive young man he is, because he was a Royal Naval officer for 23 years and left as a weapons engineering officer. After that, he was a technical director for an electrical engineering company in the Midlands for 15 years. He ran his own business consulting company for 5 years. He's retired to the borders of Scotland, where he and his wife built their own house. And his hobbies are golf, investing, and holidays, none less. So we have a great pleasure. Bill runs our user group in Edinburgh, and it's a great pleasure to welcome along. Now, you'll just have to bear with me while I find him. And there's a lot of people. There we go. There we go. So, Bill, we should be able to hear you now, sir.
I can't see the link yet, but
yeah, I'm just going to put the link on, but we can hear you. So okay, I'm going to put up the link now, and I'm going to make presenter, and that should be with you now, Bill. There we go. So, ladies and gentlemen, I'm going to hand over to Mr. Bill Ritchie. He's going to take the proceedings for the rest of the afternoon. I'll put myself on mute. And Bill, it's all yours, sir. Welcome.
Okay, thank you, David, for the nice introduction. Good afternoon, folks, from a very wet and windy Scottish borders. And a warm welcome to the wonderful world of earnings per share, EPS for short. Mark Crittenden gave an excellent presentation last week on the power of EPS. I hope that many of you heard it. I had a different approach that came to a very similar conclusion. So firstly, a short history of my path to this strategy, and then, more importantly, I will show you how you could benefit from this strategy. Please remember, of course, that all investing has some risk. As you heard from David, like many of you, I had a very busy working life. So why is this relevant? Only because during all of that time, we left our finances in the hands of so-called financial advisors and experts. Fortunately, we didn't quite lose all our hard-earned cash, but a good proportion. And after another market downturn, I vowed to take charge of our own money. It was about that time that I joined VectorVest in the late 2015. Actually, after David's seminar in Edinburgh, 4 of us decided to form a Scottish user group. Like many investors, when you first start out, there appears to be only 2 main choices: the buy and hold, which obviously means take a hit when the market turns down, or using the pick of the month newsletters and probably chasing the hottest stocks. They all, of course, promise a road to riches. And where have you heard that before? To be honest, this is probably why I joined VectorVest in the first instance. I thought I would be rich.
Bill, can I
Yeah.
interrupt you? People are saying that they're struggling to hear. If you could just maybe just pretend you're firing orders below deck.
Is that?
So maybe if you could just shout a little bit, they'll be fine.
Yeah, can people hear me better now? Are people coming into you now, David? Saying it's better? Okay, so however, as an engineer at heart, I soon realized that VectorVest provided me with more factual information without all the hype. I kept studying and visiting webinars, plus attending a very good user group. On the way, I tried several VectorVest strategies, and haven't we all? Therefore, it took me quite a while to narrow those strategies down. One such strategy, using EPS, has shown to have some legs and warrants our further study. Therefore, the purpose of this presentation is to further enhance what Mark informed us last week about the power of earnings per share. More importantly, show you how to find these good stocks, how you can create your own watch list, and give some thoughts on stocks. The next slide is just to show you the potential of EPS. It shows a back test using a group of stocks that were put into a watch list created in January 2019. Hence the J19 hieroglyphics. It's obviously easy for me to remember as I get older. It is important to note that this watch list was created in January last year, not at the end of the year. Therefore, it's not curve-fitted or doctored. From that January watch list, a sort of GRT times RT descending was used, and the top 10 stocks were put into a portfolio. And this is the result, 104% in 1 year. I think we could all live with that gain. Okay, Bill, what about the risks, I hear you asked? Well, if you follow my pointer, you will see that the drawdown is only around about 6%, which again is something that we could live with. What does it take to achieve this? So I've got to take you back 3 years. As you know, VectorVest tells us to look at the price going from the bottom left to the top right. And I must admit that I picked, well, at that time in 2017, I looked at every chart in the UK database. That was round about 1,760 charts. And I put the best 1 year trending stocks into a watch list. At that time, I was only looking at price. Importantly, I only traded stocks from that watch list for certain strategies. And those certain strategies gave me a very reasonable return. And this gave me the general idea of using a watch list of good stocks for all my trading. As I kept listening and watching VectorVest webinars, it became clear that RS and CI sorts gave better results than purely VST. In 2018, I had several searches using just CI times RS descending. My user group will know them as hot smoothies. At that time, I still had not appreciated the power of EPS. But now at the end of 2018, I was getting an understanding of that and realizing that it was the main driver of stock price. And by January 2019, I had created a watch list with good EPS and price, J19. Also at the beginning of 2019, our Scottish user group was given a challenge by Neil, one of our user group members, to beat the Model 1 portfolio that VectorVest provides. At that time, it gave an annual rate of return of 20% with a drawdown of 15% from 2015. This further encouraged me to find better sorts, and that's where I found GRT times RT descending. And I found that to be really good. In fact, several sorts using GRT are good. I would recommend that you try them. If you follow my pointer, it shows that model portfolio during 2019 actually achieved 29% and 8% drawdown. So if I go back to the slide that I showed you earlier, I must admit that I've beaten the challenge, certainly over 1 year. By the way, at that time, my wife thought she was a backtesting widow instead of the usual golf widow. I did a ton of backtesting. Okay, it's all well and good to do backtesting on various strategies and various stocks. I have no doubt that many of you have done this. The real test, however, is using your own money actually in the market. I took the decision last year to open a new ISA with £20,000 and initially bought 4 stocks from a GRT times RT sort from my J19 watch list. I added one more from the profits of that a little bit later. And as you can see, this is the result up to last Friday. Not bad for a simple engineer. Please note that there is no market timing. I just bought them on the 8th of April to the 10th of April, around about there. I must admit that this is not a VectorVest approach. Please use market timing. I'm using a 15% trailing stop here, and it's just an alert in G's. And why is that? Mainly because I prefer the 3 EMA crossing below the 8 EMA on a weekly chart. It seems to work better for me. The other problem is that VectorVest does not allow the moving average as a stop as yet. So as you can see, this experiment is working out okay so far. And even with the downturn in the market over the last couple of weeks. To date, there have been 9 stocks bought in total. I have 8 winners and 1 loser. The worst was OGU, right? I think that's how you say it. It cost me £768. The pain is that I bought it on the 17th of January this year, and by the 29th of January, I had to get out. To say I was not a happy bunny is an understatement. Note that the drawdown is still in line with what that backtesting was, which was around about 5% or thereabouts. The other interesting one to note is JDG, which is Judges Scientific. I was a bit nervous with this one stock. It's an AIM stock, and the company builds and sells scientific equipment. It had a far wider spread than I would normally go for. But as you can see, it gave me a profit of almost £4,000. So it was worth the gamble. Talking about gambling, make sure you're within your own risk tolerance when you do these sort of things. So the next part is all about you. How do you find these stocks? And more about putting them into a watch list. There are several different methods. They're all fairly simple, and it does take too long. It does not take too long, by the way. But unfortunately, you do eventually have to look at the charts of those stocks found. I will show you how to make it easier on yourself for visually looking at them in the next slide. You could take the top 100 VST stocks and put them in a watch list, or you could use the roller stocks, the pale blue chip stocks, or even RS descending stock and take the top 100. Eventually, you will be left with anywhere between 100 and 300 stocks, which you are going to have to look at. There is no need to do as I did, look at all 2010 stock charts in the database. The other thing that you can use is a unit search tool and create a search. I've got a couple of examples of that in a minute. What are we looking for? Well, this is the home serve, which is from 2015. I have removed the candlesticks, and I've used the 3 and the 8 EMA. You can use any other short-term moving averages, and a 40-day moving average. And that's very quick to have a look at this and see that it's going from bottom right to top, from bottom left to top right. Also, you'll note that the earnings per share is doing a nice, steady incline upwards. So all you have is, you say you've got 100 stocks in your watch list. All you would do is quickly go down the side, and you just click down through them and take a note of each one that meets this criteria. I've just put a slide here of what we're looking for. A simple search for these good stocks would be something that Mark, I think, showed you last week, which is a year ago, earnings per share is greater than what it was a year ago. Price split adjusted was greater than what it was a year ago. RS is greater than 1.2. I tried 1.3 there and above, and I missed one or two really good stocks. So you can play around with that particular figure. The same with the growth figure. As long as it's growing, you want to try several different versions. Anyway, that's a simple search. The more detailed search could be using delta. The time of the search, earnings per share, delta, and then you go to custom and date, and you're looking for 13 weeks. You can take any number of weeks there, and whatever you feel that you want it to have grown by. And you can see I've done a whole variety of them there. You can even go to the time of search and show that it was 13 weeks ago. And so this would actually be 26 weeks back. But that gives you the idea. There's not a necessity to put in another GRT here, I think. Right, this is a demo only. You'll notice that I've got VST descending here, but I've just done this as a demonstration of what you can do. Again, you can have earnings per share, delta, and you can do a variety of weeks or even days growing. The other thing I wanted to point out was that you can actually go back to a specific date. And in this case, I think I've only found about 11 stocks, so even although I've gone to all, there's only been 11 found in this particular search. Not surprising, really. You've got the will to, if you've got the will rather, to go and do all of these things, then that's what you can do. Going on from there, this is my watch list that I created. This is called J20 for obvious reasons. And this is not all of them, but this gives you 53 of them this time. The main thing about this particular one is that I want to show you, if you go down to the bottom of your watch list and you see where it says watch list average, and if you click on that, you should get something like this. That shows you that all of your stocks are giving you a nice trend line going up. Again, I've just used the 3 and the 8 EMA. I tend to use that for a lot of things. And the 40-day MA. Also note that the earnings per share is going up, although it's a little bit of a worry that it's flattening out now. But now we'll move on to what you can do, or with a watch list. First of all, you can do just the very basic, which is GRT times RT descending. And all you have to do here is filter by equals to your watch list. And from that, I've just taken the top 20. And you can see that you get a nice list of good stocks there. What else can you do with a magical watch list like this? Well, you can actually go to any vector-based strategy that you like, and you can then add here at the bottom of it. So in this particular one, I've just chosen the explosive breakout one. This is back in January. This is the normal 5 lines that are in your explosive breakout. And then over that, you just superimpose your watch list. So filter by watch list equals your watch list. And you can see that you have a nice collection of stocks here. Again, I think there was only a handful, not the full 20 that came up with. But you could use other searches. I've got, if stocks gap up, I just added my watch list. So I'm hoping that any of my stocks in that watch list that gap up, I've taken note of it. Maybe you'd use long-term winners, the worry-free one. You could just add your watch list to the bottom so that you're just picking the best of the RS worry-free, and it comes from your watch list of good stocks. And there are the Midas Touch. I quite like that one, especially the modification one, which is found in the Midas Touch area. But again, just put your watch list in at the bottom. So really, I'm hoping that you've got an understanding of this particular type of search, and it's a fairly straightforward strategy. So the next slide is going more about the selling side of it. And this is a lot more difficult. Some of you will have a long-term approach. Some of you will use a slightly shorter-term approach. But here are a couple of ideas. You could use the basic vector best equals cell. I like using the 3 EMA crosses below the 8 EMA on a weekly chart. Unfortunately, again, as I said, the Genius cannot use a moving average as a stock criteria as yet. You could use the Portfolio Genius to alert me to, say, the profit locker when it has a 15% loss. The one good thing about the profit locker is that it uses some form of ATR. I did like using the average true range look back over a 20-day period at something like 2.5 times. The 15% trailing stock or trading stock, some like ratchet stocks, or the old favorite of RT crossing below 1. You could possibly look at stochastics or MACDs on the charts as well. So really, where are we coming from? We're coming from the conclusion that there is no secret formula, even though I've tried to find one with all the hype. Just stick with one or two good strategies. This one I think is worthwhile looking at. So the checklist would be to make a watch list using EPS and price growth over 3 to 5 years. I used to just use 3 years, but I've been convinced that 5 years and even 1 year is worthwhile to find some other types of stocks. 1 year helps to see any up-and-coming stock. Buy when the vector best color guide indicates it's safe to do so. And you can also use your own criteria for buying. But as long as you're trading from that watch list of good stocks, I think that's the most important thing that I can get across to you. If you're more aggressive, you could use RT crossing above 1, or as I showed you earlier, the explicit breakout. And when you're selling, just look at the previous slide. There are several good strategies in vector best, but this is one of the ones that I think is worth your attention. The worry-free strategy is also good. Was this strategy, or will this strategy work all the time? The honest answer is, I don't know. What I do know is that it's just another strategy that has shown good potential. And another plus is that this strategy works for the US stocks as well. So why don't we give it a go and try it? Pay the trade initially. Finally, thanks to my own user group for always providing new ideas and challenges, and to Mark Crittenden and Mark Curran for their research, which has actually clarified independently that this strategy is worth your consideration. Thank you, David, for allowing us, the members, this opportunity to spread the word on finding some good stocks and strategies using vector-based. And if there's any questions, I could answer them now.
Thank you, Bill. That's great, sir. I think it's interesting to note that I listened to Mark at the Guildford user group, or maybe it was the Oxford user group, and then I was up in Scotland and I was listening to Bill, and I felt that they were talking about pretty much the same thing. So I put both of them together, and that's where these two presentations have come from over the last couple of weeks. Mark and another Mark Cowan, who we'll be hearing from, I think, in a few weeks when he's finished his house renovations. And Bill up in Scotland have been working together on this, and I think it's a tremendous step forward for us. I tend to be too aggressive, too short-term trading, so it's a great extra use of vector vest. So, Bill, there's a couple of questions here. One question that I get: do you use the 3 and 8 to get into positions, or do you use a 3 and 8 just to exit a position?
I use the 3 and 8 to get into positions as well. I do like that one. I know that one of my user groups just reminded me that Petra Hess did that on an international forum many moons ago, but she uses the Bollinger Bands as well. But I tend to just use the 3 and 8, and also I use vector best methodology now a bit more than I used to, which is the market timing, because I feel that if the stock is going up on that particular day as well, then that's a good time to go. It didn't work, by the way, for that OGN one.
There's always one to keep us humble, Bill.
Yeah.
I've got a question here from Robert. He says, when you're doing searches and building watch lists, do you take into account the sector or industry in your thinking?
No, I didn't for this particular trial. I just obeyed the rules that I'd seen on the back testing that I'd done. I think it's a wise move, though, to be perfectly honest, so that when you're entering, maybe you could take that into consideration.
Okay, we've got one from Steve. You're Steve from just down the road from you there.
Okay.
He says that he finds that GRT searches bring up too many AIM stocks.
He's absolutely right. Yeah.
Is it sensible to limit the number of AIM stocks within a portfolio, Steve? Steve is like myself. He's more short-term, I think, than his experience.
No, I find that when you're looking and finding these stocks in the first place, it does actually limit the number of AIM stocks in your first instance.
Okay. Nazca asks, are you shorting the market?
Not with this particular strategy, no.
Yeah, okay, cool. Fergus says, thank you. And Lillian says, brilliant. She never says that about my presentations, Bill. So she always shouts at me, what's the target? What's the target?
Yeah, it must be my Scots dialect.
Graham says, brilliant. And Stuart, your old golfing partner, says, very good, great presentation. So Keith down in Taunton says, great presentation. And Mark, yes, Mark, the 3 and 8 Bill is, you're using that on a weekly chart only. I'm correct in saying that?
That's correct, yes.
Yeah.
It's
the 3 and 8
is a lot of the chart that you get.
And Christian from Denmark says it was a great presentation. George from the London user group, he asked me, George asked me, do I use weekly charts? No, I don't. I use daily charts, but in this methodology, weekly charts work exceptionally well. So that's just me, probably too short term, George, always trying to finesse an elegant entry and miss out many opportunities for that. So Keith asks, Bill, do you rebuy a stock that you've been stopped out of? And if you do, how many days do you give it before you buy into it again?
I probably give it a week before I buy into it again. But yes, I do rebuy stock.
Okay, Keith, a week. And Dilip wants to know, does the strategy work well when the confirm call is down?
I thought this might come up. A member last week asked Mark about 2008 and 2009. So, being the engineer that I am, I decided to have a look during the week and see what it did. In 2008, there was only 714 stocks to choose from in VectorBest, and I could only find 24 that were anywhere half decent. And to be honest, what happened was that there was a 23% drop. So over that particular year, there was a drop of 23%. However, in 2009, using again from 863 stocks, I had a portfolio of 23 of them, which met my criteria, and that had a gain of 43% with only a 13% drawdown. So the answer is, I think that it doesn't work that well in a call down. So this year might be an interesting year to watch it. But I, like Mark Crittenden, like to look at stocks that have bore up well under the drop and then put them into a portfolio, a watch list for next year.
Yeah, that's Bill, that's what my very first mentor taught me way back in South Africa in 1982, that if you have a pullback, always watch the stocks that didn't pull back nearly as much as the market. But those are the ones that were going to shoot when the market, in fact, did turn. So that was one of the first lessons that I was taught in markets 35 years ago. Jill from Arbroath says, thank you, Bill. And Graham out from Oxford Way says, price less than value. Do you build that into your analysis at all?
Not really. I will, when I come to actually buy, worry a little bit more about that, but no.
Okay. No. All right. Neil? Neil says the challenge was accepted and you've overachieved. I presume that's something between you and Neil. Paul Smart says EPS rules okay. Diane says exciting presentation. Mark says thank you. Carwin, who I haven't spoken to yet, but I'm hoping we'll do a presentation on the MTI stroke buy-sell ratio, which he has got a great deal of experience of. Julian says, easy to understand presentation, very good. And Keith is very happy with the answer to your question. Rob from Sydney, what does Rob from Sydney say? Rob, it'll be online soon at the VectorVest page, okay? Diane, who's our Elliottician, Bill, and a short-term trader of note. How does Bill get alerted to actions to take? By running VV nightly or setting up alerts?
I set up alerts, to be perfectly honest. I find that is a nice way of finding out. Because I could be on the golf course and then I'll come in and then I'll find out.
Or on holiday as well. I thought that was quite funny. Golf, investing, and holidays.
Not necessarily in that order.
That's right. It was like a cover for Men's Health magazine. Pete says, have you tested many other sorts?
Yes. I sigh there because I've done tons of back testing and with a whole variety. The problem with VectorVest is that you could go on and on and on, and there are so many different types of sorts, and then you have to worry about when you're back testing what type of stops you have, and so on and so forth. So it does go on a lot. But I have tried many. But GRT, if you put GRT into any of them, that seems to be a really good one.
That's pretty much what Mark said last. I asked Mark that question last weekend. That's pretty much what he said. And by the way, you jest about being, or your wife being a VectorVest widow. We have a chap in Kent who, in fact, his VectorVest backs testing was mentioned in his divorce proceedings, believe it or not. Now, jest not.
Oh, no.
So
we'll have to give it up now then.
Dilip asks, what is drawdown? Well, Dilip, what happens is if you've got a portfolio of stocks and let's say they keep going and they keep going, and then you have a pullback in the market, well, it is the drop from the highest point. So if your share portfolio is up 40% and then it pulls back and it's only up 25%, that would mean there's a 15% drawdown. Okay. Nazca, you need to email me. Anybody who wants the slides from Bill's presentation, folks, you just need to email. I haven't got a list. Bill hasn't got a list. So if you want the slides from this week's presentation or last week's presentation, then if you email me, and I'll give everybody my email address now, and I will do my best to try and get them to you as quick as I can. And that's sent, all that comes through to my phone. You should all have that email address now, and I'll send those off as soon as I can. Steve says it's a great presentation, and Tony says the same. Tim says the same. Tim, a very experienced investor, formerly from South Africa. Rob says, great stuff. Stuart says in Manchester, the golf should be first. And we've got a more serious one from Bob here. Bob says, when you replace a sold stock, do you run GRT times RT search and buy the top one, or review the top 5 or so and select the best one?
That's an interesting question. I will run the GRT times RT from my watch list and then see what my criteria is at that particular time for buying. And you can do the same. Everyone will have a different buying technique or entry, so they should do that. But it's usually GRT times RT from my watch list.
Okay, Eddie, I will. If you email me, I will send you the slides ASAP. Pete says, "Have you added to winning positions?"
Not on that ISA one, but I put a small amount into another portfolio, and actually another ISA. I run several, and yes, I have added to that, and it's working remarkably well. I like that.
Okay, and Neil asks, is it possible for VectorVest to create an EPS Kings watch list on the system for all of us? It is an eyeball to see them, and I think although there's a great deal of common ground, Neil, in the list that I would present and you would present and Bill would do, there will be a few that are a little bit iffy. But I'm in fact working on that, Neil. I'm trying to get somebody to do that. So we shall see. That's a work in progress. Okay.
So if we could just add, sometimes you're quite right that we will have probably about 70 to 80% of the same stocks in the watch list. And if you're not very good at finding those particular ones by any of the methods that I've shown you, I'm sure there would be people in your user group that would help you out.
There's something happening with your sound there, Bill, in the background. There's a drum going off in the background. I don't know what it is. George, very experienced investor from our London user group. He also goes on holiday a lot. How often do you update your watch list? I think that's a good question. How often do you update your watch list?
Once a year, but during the year I will put into another watch list, take the standard watch list, and then I will put in additions or take out stocks during the year. But I only use the same watch list once a year.
Okay, thank you. Well, folks, it's 2:30. Bill, thank you very much indeed. An enormous amount of work that's gone into that. And anybody that wants the slides, folks, just email me, and I will, in fact, get those slides to you. Folks, just remember, in terms of admin, tomorrow night, the Manchester user group, if you want to come along, you don't know where it is, email me and I'll sort you out. And then on Saturday morning, we have the Birmingham user group. And then next week, we've got 2 user groups in the one evening. That's Wednesday the 12th. Both Taunton and Guildford are on Wednesday the 12th. I'll be at the Taunton one. I haven't been there for quite some time. Okay, so I won't be in Guildford. I'll be in Guildford in March. But I'm looking forward to seeing Keith and Malcolm, etc. in Taunton. I'll speak to you before that. So, folks, next week you're back with me again. And I think I just have to reiterate that the technical position of the overall market in the UK and the USA has turned down. I think we've still got probably 3 or 4 days to go before the market makes a concrete decision as to whether this is a pullback or whether we're actually moving into something which much more serious, much more like the October, November, December pullback that we've had in 2018. So just be very careful with the open profits. I haven't done anything yet, but let's be very careful with open profits, folks. Remember, we can always get back into them again. Everybody's strategy is different. That's why you've got to have sat down and prepared your own little plan. Those of you that are traders should have been out the middle of last week. Those of you that are investors, well, if we get a confirmed down tonight, no more buying of stocks, watching your stop losses like a hawk. Get rid of the ones that have underperformed on the way up. Give yourself some cash in your hip pocket to take advantage of the next turn up. Okay. Take care, everyone. And this will be up on the website a little bit later on. And anybody who wants the slides, give me a shout. Bye-bye. Thank you, Bill, again. Bye-bye, everyone.